Welcome to the Crypto 101 Show, the best place to learn, understand, and grow with your cryptocurrency education for all ages, starting with the basics to help you get a solid foundation with all things crypto. Listeners' Crypto Questions Volume 2. I need to start off by saying this is not financial advice, so if you're looking for that, this show isn't for you. The content of this podcast episode is for informational purposes only. The opinions expressed here are not meant to be taken as financial investment or any other advice. In this episode, we are discussing Listeners' Crypto Questions Volume 2. There are 4 questions from 4 different listeners. If you would like to ask any questions for future episodes, there's a couple ways to reach out. Through our social media with Facebook or Instagram, through our newly formed Discord group, or via email. All of these links are provided in the show notes description. For our first question, Pascual from Spain asks, what are some other use cases for smart contracts? Really quick, a smart contract is digital code that offers a set of promises on predefined conditions that the parties involved with each other have agreed upon. Simplified, the parties can set a specific condition that can trigger an action or a series of actions when met, all digitally over the internet and recorded on a blockchain. For example, in real estate, a buyer and seller can create a smart contract that can automate the deal once the buyer pays the property value to the seller. To have this happen, the property first needs to be digitized on a blockchain with blockchain technology. The biggest benefit of smart contracts is the automation that it offers. This means that it is interruption-free and no third party can make changes in the agreement and decision. This resolves issues in some processes where trust is an issue. Some of the most known use cases for smart contracts are real estate deals, escrow, mortgage loans, music royalty payouts, payroll payouts, and supply chain management. Smart contracts are a game changer. Trustless, automated, and immutable. 3 really good things to have in the digital world. There are 2 use cases I think that may be new when it comes to utilizing smart contracts. The first one would be with voting. As younger generations take over, it could potentially change the way we vote and make it easier for people to vote, especially with ID verification. The second one could be energy trading, where smart contracts allow for peer-to-peer trading of renewable energy. Those are 2 that I can think of as possible newer use cases. Question 2 is from TerryCoiner1. What causes cryptocurrency exchanges to go bankrupt, in particular FTX? This is a pretty complex question, but also not really at the same time. It's more about multiple things that could cause an exchange to go bankrupt. They can get hacked by a cyber attack. Some allow users to lend their crypto for high-paying interest in return, which can cause major issues. If mass users do a bank run on an exchange withdrawing massive amounts of funds at one time, and some even say yield farming could cause an exchange to go bankrupt. But if we're talking about FTX specifically, I'll try my best to simplify and sum up as best as I can. FTX used its customers' assets or cryptocurrency stored on the exchange to liquidate its assets. There was a CoinDesk report that talked about Alameda Research, the crypto trading firm also owned by Bachman-Fried, who also owned FTX. The report showed Alameda Research relied heavily on FTX's native FTT token and made up the majority of its assets on Alameda's balance sheet. This created major concerns about manipulation of the token, and Binance, which is another exchange, was concerned about this and decided it was going to sell all its FTT holdings, which caused panic. This caused crypto investors to panic and withdraw all their funds from FTX. Basically, it was a run on the bank, so to speak. With everyone trying to withdraw at the same time, the company didn't have sufficient funds in reserve to meet customer demand. Some former employees also described issues to the Wall Street Journal, stating that the firm had bad record keeping that left its profits and losses unclear, and that there were major concerns over business ethics. BlockFi, another big exchange, was also one this past year to go down. BlockFi, which was more like a crypto lender, allowed crypto holders to use their crypto to leverage or loan out their crypto for high percentage yields and derivatives. And there were risky unsecured loans at high interest rates to people or other crypto owners who wanted to use it for capital to companies that wanted to use it to make risky unsecured loans. This basically means you keep your coins on the exchange where the other people can borrow it and you make a high percentage return from it. You would basically be a bank. Sounds great in theory, but as we stated in one of our first episodes, not your key, not your coin. As BlockFi filed for bankruptcy, people lost all their crypto. This is why it's crucial to keep your coins off exchanges and to remember that these exchanges aren't backed by the FDIC. Gino from Bismarck, North Dakota wrote, "Why does it seem Bitcoin purists and altcoiners and shitcoiners are always fighting with each other? There's definitely a lot of drama between these two groups. Bitcoin purists believe all altcoins have zero use cases and that Bitcoin can do it all. They believe Bitcoin is the one true king of currency. They believe altcoins don't bring anything to the table. And altcoiners hate Bitcoin purists for these very reasons. And let's be truly honest, many crypto investors on both sides of the aisle have their emotions and identity tied to the coins they are in. Bitcoin purists and altcoiners both can be emotionally attached to their specific coins. There's not much else to say except maybe a bit of tribalism and why I think it's important to keep a level head and not get emotionally tied to any of this. Critical thinking is crucial, and in all honesty, anything with finance is speculation, blind trust, and hoping it goes up to reward an investment. Cryptocurrency, fiat currency, or any other type of investment are all the same in these ways. So try to keep your emotions out of the coins as best as you can." And Rachel from Detroit, Michigan, with our last question wrote, "Who do you recommend listening to when learning about crypto?" The Crypto 101 show, of course. All jokes aside, I would say listen to different people across the board. Get a really solid foundation of how money and finance works. When you do this, you'll find it easier to navigate. But if you're new to this, I recommend reading as much as possible about how it all works. Get a real foundation and understanding of what it's about. I tend to gravitate away from opinions or people trying to sell an idea. That just causes bias. And to be honest, I really try to just comb through things and strictly look for the facts of it all. I'll try to hear what a wide variety of people have to say, but I don't attach emotions to it. Not one person is right about everything. On that note, I want to be extremely upfront that I try my best to leave all of my opinions out of this. I know this is very condensed and simplified, but I want you to gain your own understanding and beliefs and not be persuaded by me. I hope this episode was insightful and helpful. If you have questions you would like to ask about anything pertaining to crypto, please either DM the show via the Instagram or Facebook profiles, join our Discord group, or use the email address provided in the show notes with your question. Remember to share, follow, and subscribe to our mailing list and your favorite podcast app for future episodes so you can gain more with your crypto knowledge. Thanks for listening and see you next time. Thanks for listening to this episode of the Crypto 101 Show. If you'd like to join our email list, email us at thecrypto101show@gmail.com. For more helpful tips, subscribe in your favorite podcast app so that you don't miss our next episode.